Hello and welcome to Konichi Value, the podcast with me, Ray Saito, that focuses on value investing in Japan. Today, we're going to talk about a massive company you all know, Sony. I want to know if it's a dying tech whale or a forgotten tech titan. Let's take a look. To start off, Sony is a fascinating company for value investors because on the one hand, it's constantly going through turmoil and reorganization with fluctuating sales and ever-changing strategic decisions. But on the other hand, if you look at the numbers, it's consistently delivering profits and long-term value with a relatively cheap stock price. Sony is a tech titan that has shaped your life in one way or another. The company actually works in many industries, not only electronics, but also entertainment, games obviously, and finance and insurance. In 2014, Sony reported a huge deficit of 120 billion yen and the stock tanked. Since then, the company has pulled off a magnificent V-shaped recovery with a net income exceeding 900 billion yen. The recent business performance has also been excellent, and in December 2021, the stock price temporarily exceeded 15,000 yen, setting a new all-time record. This is due to stellar business performance in gaming and most notably electronics, which is the main businesses. Let's dig deep into how Sony makes their money. So, you probably know Sony for its PlayStation, or maybe the Handycam video camera, maybe the Vaio PC that actually Apple MacBook just copied at the start, or even the Aibo robot dogs, which has been a pretty successful project for Sony over a long term. However, where Sony makes their money is actually quite interesting. First of all, we have Sony Pictures and the PlayStation sales and the sales of the games especially, where they make a lot of money. But more notably and more recently, they make a lot of money from so-called CMOS image sensors and LED crystals used for LED TVs and other screen technologies. Also, their financial services in form of Sony Life Insurance and Sony Bank are steadily gaining ground, especially in Japan. Since the 2000s, Sony's main electric divisions have fallen behind China and Taiwan, and South Korea to some extent, as well as the US, where you can mainly see Apple just crushing Sony's former glory products. But I'm here to tell you that we might see a resurgence of Sony. So let's look at the value of Sony and compare it to its stock price. So as I said before, the stock price earlier this year, very late last year, reached as much as 15,000 yen. And of course, the stock price has gone down a lot since then. But more on that later. First, the value of Sony is quite interesting because in the past 5 years, its PE ratio, price to earning ratio, has been about 13 to 15 times. And due to the recent downturn in the market, it's now 15.9, even though it was up to 24 when the stock price reached 15,000 yen. If you compare this to other companies in Japan, especially in the electronics field, you might not be so surprised to learn that Sony is at somewhat of a premium for the Japanese market. We have Panasonic at 11.7 PE right now, Hitachi at 14.7, and Mitsubishi Electric at 13.3. So again, you are paying a premium for Sony as a stock, and probably rightly so, because those three companies mentioned before have not done as well. Moving on to Sony's dividend records, I feel like, yes, it is a growth company of sorts. It has grown a lot in the past 5 years. But overall, it's a cash cow. Their businesses are quite stagnant. Many of them aren't growing at all, especially the Japanese focused one. And still, the company has a dividend yield of 0.38%, which is very low. With that said, the dividend yield has consistently increased for the past 5 years. It has actually more than doubled from 2017 to 2021. But still, at this low range, I have a hard time ever seeing Sony become a dividend stock. So it's definitely a stock you really have to believe in the core products and their growth strategies if you want to get into it. So going back to the stock price, we can really see that Sony's stock price have grown like a growth company. So it went from, in 2014, when they reported a massive loss, they were worth around 3,000 to 2,000 yen at worst. And in December 2021, they reached 15 and even 16,000 yen for a while. However, because the recent downturn in tech in general, they're down to 11,000 yen. I think the downturn is definitely justified because Sony did well during COVID-19, and there's things they suffered from, the supply chain shocks that have made them suffer in their margins of their CMOS sensors, especially the CMOS image sensors for cameras that are very, very popular. That hasn't really been fixed. If anything, supply chain issues have gotten worse this year and inflation is ticking up. So the stock definitely deserves to be a bit hammered. But the business performance still looks very stellar. So from 2013 to now, the company's overall revenue have increased from 6.8 trillion yen to 9.3 trillion yen. And that is fairly impressive. That increase have not always been growing, but it's definitely a steady growth that shows that the company has a steady strategy and steady income streams. However, the story does look a bit different when we look at the operating income and the profits. So as I said before, we had 2014 and 2015 when the company actually lost money. In 2014, they recorded a 120 billion loss. And then, if we fast forward to last year, 2021, we had a 1 trillion yen profit. So that just shows the V-shaped recovery Sony has done. However, it looks like the profits are going down a bit this year. We don't know yet, obviously, because we're only half year in. But it's a sign that perhaps the COVID-19 pandemic helped garner the massive profits we saw in Sony. However, the reason why Sony has increased their profits are proper reasons. Let me go through them. So first, we have the Sony PlayStation 4 that sold above all expectations. It's one of the best sold consoles of all time. And on top of that, just the game sales and the online pass sales, etc., exceeded all of Sony's expectations. Also, Sony actually holds 50% of the market for the sensors I mentioned before, the CMOS sensors. And these sensors are really top of the line. They're installed in everything from smartphones to autonomous cars. So it's not only a place where it's good to be right now, but it's likely a place with a huge growth in market. Definitely, there is competition here from China and Taiwan, but so far Sony has managed to stay ahead of the CMOS game. They constantly give out the best sensors, which are used in anything from the Apple iPhone 13 to the most expensive Samsung phones. Furthermore, the financial sectors accounts for 2/3 of Sony's assets. These segments have smaller profits, but give a great buffer if the electronic fields runs into a deficit. Even though the chart indicates that 2022 might be a worse year for Sony than previously, the CEO, Keiichiro Yoshida, is very bullish. He is convinced that their strategy is centered on subscriptions. The online subscription for Sony, PlayStation, also their music and movie subscriptions and games will steadily increase, even with the COVID pandemic relatively calmed down. And they also think that they will see higher profits in finance and in CMOS sensors in the coming years. Of course, he's the CEO, so he's going to be more positive than the average person on the stock market. But I think they have a big chance of delivering. And if that's the case, the Sony stock is definitely undervalued. So, Sony stock is showing an upwards trend, and the CEO is definitely bullish. But is the stock worth buying? Well, it is impressive what Sony has done. Over the past 10 years, they have grown more than 1,000%. The company has also shown that they're incredibly agile, especially for a Japanese company, and that they can pivot to new sectors. But I would still wait before deciding to buy this stock. The main reasons are that the dividend yield is too low for what initially is a cash cow company. Yes, they've shown that they can grow, but their markets are either saturated or filled with competitors. So they should have a higher dividend yield based on what kind of company they are. Secondly, I think the CMOS sensor industry is really interesting. I don't know enough about it to have an educated opinion, but I think that cheaper competitors will catch up, especially on the lower end market, which seems to be a market that's garnering traction just because all smartphones are becoming more and more commoditized. Thirdly, the Sony PlayStation segment is extremely profitable, as I said before. But IT giants such as Google, Apple, Meta, Microsoft have all announced that they will enter the new era of gaming, the cloud-based gaming market. I think that Sony isn't that good in the latest and greatest of cloud gaming tech. They haven't really shown that their online store or their online offerings are especially good. And just compared to these other giants, they don't have the same online presence. And it's going to be really hard to build if the online gaming market becomes more successful. However, the stock price has lost a lot of value without any reasonable explanation just because tech in general is so hammered. And I think that if Sony just goes down a little bit more and still manages to keep their revenue the same or even higher, it's 100% a buy. And even if you buy it today, it's a safe bet. They're making a lot of money. They're not going to go out of business anytime soon. And rather than sticking to some startup that's struggling now and don't make any money and might lose another 50 to 90% of the value, Sony will definitely stay in this range for a long time or go higher. So, to summarize, Sony is and has always been a leading tech company that had a sluggish struggle in the late 90s, the 2000s, and even show horrible performance as late as 2014. However, during these times, they've always managed to reinvent themselves in ways where we haven't seen Toshiba or Panasonic or other Japanese companies do. And I think that is to show that Sony has a better standing, a better understanding of the market, and have done better groundwork to prepare for this era in technology. In general, I think that Sony is a buy and will be a buy for the foreseeable future as a stock. But right now, when tech is so negative and Sony's results might have been doped by the COVID pandemic, it might be a good idea to wait a little bit longer, at least until their Q2 report comes out or Q3 report, so you can see if they can uphold this growth momentum that they have had for a long time. That's my 2 cents on the Sony stock. I hope you liked it. and I hope you subscribe to Konichi Value. Thank you and have a great day. Bye bye.